Hello everyone. Welcome to our new video on Silicon Valley Bank collapse. According to the reports, this banking failure is said to be the second biggest in American history, with the collapse of Washington Mutual Bank in 2008 being the biggest. In this video I'll try to explain how this failure happened and give my opinion on the concerns that this banking collapse might create another recession like in 2008.
Silicon Valley Bank collapsed on Friday.
The collapse of Silicon Valley Bank is causing shockwaves across the entire business world.
The Silicon Valley Bank, the second biggest bank collapse in U.S. history.
It is the epicenter of tech startups, venture capital. Silicon Valley Bank, it is the 16th largest bank, or it was, in the United States.
The collapsed bank had invested in around 21 Indian startups.
Before we go into the details, let us first understand how banks work. From the perspective of an individual, a bank is a place where people keep their hard-earned money for safekeeping. However, from the perspective of a bank, it is running a business, and banks have a distinct business model. Banks use the money deposited by customers to make money for themselves. They do this by giving loans to other companies and individuals and charging interest on those loans, which becomes the bank's profit. The second source of income is investing in various places, such as the stock market, government bonds, or buying gold, to earn more money. This is the common business model of all the banks. Now coming to the Silicon Valley Bank, it has began heavily investing in startups, especially technology-based startups from around year 2000. The bank would give loans to those companies that were in the venture stage, and by 2015, it was reported that 65% of all startups in America were served by this bank. With global lockdowns, venture capitalists, a person who makes capital investments in companies in exchange for an equity stake, from all over the world began investing in software companies. This led to the startups raising a lot of money in 2021, with almost double the previous year's record of $330 billion raised in America. And now these technology-based startups have so much money, they would want to deposit the funds with the bank, and the Silicon Valley Bank was the number one preference of technology-based startups. This is why in March 2021, the value of the total deposits with the bank was around $124 billion. It was at $62 billion the year before. This was a huge jump, with so much money being deposited into the bank suddenly. Since the bank had so much money in the form of customer deposits, they decided to use it to make even more money. So SVB used the billions of dollars to invest in government bonds. SVB bought a large number of bonds at a time when the prevailing interest rates in the market was quite low, according to America's Federal Reserve. It was expected that the interest rates would remain low, but this didn't happen. The interest rates increased. This is where the real problem started for Silicon Valley Bank. You might wonder what these increased interest rates has to do anything with the bond investments. Yes, there is relationship between bonds and the interest rates. To keep it simple, just understand the relation between bond price and interest rate have an inverse relationship. If interest rates go down, bond prices go up. But if the price of the bond you've bought falls, you will have to bear the losses. This turned into a worst-case scenario for Silicon Valley Bank. The American government increased the interest rates to control the rise of inflation. By raising the interest rates, the value of the bonds held by Silicon Valley Bank crashed. They suffered a huge loss. But this wasn't the only loss. The second negative impact was even greater. By increasing the interest rates, the interest rate on borrowing loans increases as well. For startups and companies, taking loans became more expensive. So they would avoid taking loans. What else could they do to meet the funding requirements? They would use the money they have deposited into the banks. By 2022, after the interest rates had increased, the tech startups wanted to withdraw their deposits to meet financial needs, and it was reported that around $42 billion of deposit withdrawal requested by the companies within 48 hours. The bank wasn't able to raise the cash it needed to cover the outflows, which prompted regulators to step in and close the bank. Now let us understand how this Silicon Valley Bank crisis impacts the startups. In the short term, there will be a scarcity of funds parked with SVB for the companies that count on them as their primary banking partners. However, this shortage proves to be a temporary blip, as the US government has already confirmed the availability of funds for all. But in the long term, this collapse could lead to decreased funding for startups and a decline in investor confidence in the general technology sector. These aftereffects could cause a slowdown in innovation, a reduction in the number of startups and growth rate for startups. Another casualty of the collapse is the climate change agenda. About 50% of clean energy technology startups working to develop and scale up much-needed solutions were banking with SVB. Does this crisis have significant impact on Indian stock market? Experts say that there will be some impact on the sentiment of the market in the short to medium term as it's a global contagion, but will not affect Indian equity markets in the long term. The conclusion is be it a bank or an individual diversifying the investments, and not put all savings into a single asset to avoid potential losses. Thanks for watching the video. For more interesting videos, please do subscribe to our channel, The Tech Critique.